So starting with the U.S. Federal Reserve, who do the recent emergency interest rate cuts and actions really help the most?
Probably the most important thing is making sure that credit remains available to businesses, despite the fact that interest rates are low in markets. There were some signs of credit flows being interrupted. The special facilities that they put together for commercial paper and some other forms of credit will probably help to make sure that businesses can get the cash they need. So that's going to be extremely important as we go forward.
Now, we know that President Trump had been pressuring the Fed to lower rates since he was elected, and even more so now amid this crisis. But are you surprised that the markets seem to draw little to no comfort from the rate cut announcements in the U.S.?
The rate cuts, and in particular the credit facilities, I think are structurally important. But the differences between the interest rates as they were 2 weeks ago and what they are today were between very low and extremely low. The financial markets, the stock market, I think, looking at the implications of that, are probably not all that excited. When the president starts talking about and when the Congress starts acting on fiscal stimulus, I think that may have more of an impact. It's potentially more important, especially to the extent that it gives people a sense of confidence about having income that they can spend, having creditors believing that their loans are going to be serviced by their retail customers. So that has the potential to help, but let's face it, this is a very dangerous situation.
And what's your take on some of the notable moves that other central banks are really making to stave off the economic fallout that comes with the COVID-19 outbreak?
Well, we've seen low interest rates everywhere. And of course, in some locations, especially in Europe, interest rates were actually negative. So again, in terms of rates, there isn't that much of a difference in terms of what's available to potential borrowers. What is probably most important is the reassurance that credit will be there so that ongoing concerns who are suffering in the current interruption of business will be able to keep going, will be able to keep their employees in place, will be able to remain stable, and ideally, when the contagion ends, they will be able to keep their businesses going without missing a beat. That's probably the most important thing that we can accomplish on the credit side.
Now, obviously, we're seeing that China is starting to get back to business, albeit in a very cautious manner. But how will the interconnected nature of the U.S. and China's economies affect each other?
It's, of course, very important to have China as an active part of U.S. Value chains. And, of course, the U.S. is an important component of Chinese supply chains as well. So these two economies have become interdependent. It's a good sign that China is able to begin functioning again, with, of course, the concern that we need to be careful that we do not prematurely try to get back to business and suddenly discover that we have another outbreak of the virus. So the medical side of this, the public health side of this, is extremely important. And of course, what we don't know about the coronavirus could fill volumes, and probably will, not too far down the line in terms of what we know about public health.
And to your point, obviously this is a very fast-moving situation. Obviously a lot of countries taking unprecedented steps worldwide. Just very quickly, threats of a recession, worst-case scenario and best-case scenario, what could we be looking at?
I hate to think about the worst-case scenario, but if you think about the prevalence of cases in some of the most affected economies, you can be talking about significant cuts in work, individuals, even in manufacturing firms. You know, we started this process, this problem, in the service industry, where individuals work hand-to-hand with many customers, and the possibility of contagion is the highest. but now we're even concerned about the possibility of contagion within manufacturing establishments and even potentially on goods that are going out the door. So this could be spread very widely. If we get to, on the other hand, the best case, if we look at a peak in cases in April to May with a decline thereafter, and we can see the light at the end of the tunnel, we could look at a couple of negative quarters and then possibly get to the point where an economy is growing again. But so much of this is dependent on the public health side,
right.
And that's where we really don't know enough.
Indeed. Well, thank you so much. Good to have you on as always. Joe Minarik there, Senior Vice President and Director of Research for the Committee for Economic Development of the Conference Board.